What's up? It's Control Trades, and in today's video, I'll be discussing key levels. So what are key levels? Key level is another term for support or resistance, and these are levels on the price chart that have attracted aggressive buying or selling in the past. When someone says there's resistance at a level, that means there historically was aggressive sellers at that level. If you're looking at a price chart, it's an area on the price chart where price has rallied in the past and then rejected hard off of. You'll see it act kind of like a ceiling. Think of it as if you're in a tight room and you jump and you hit your head on the ceiling and it pushes you right back down. The exact opposite applies for support. Support is where price has fallen to, an area on the chart where price has fallen to and then bounced off of hard because there's aggressive buyers at that level. Think of support as if you were playing with a bouncy ball. If you throw the ball at the ground, it bounces right back up into your hand. Same thing as support. You'll see price fall right into a level and then bounce straight back up and have a clear change of direction. So just some tips if you guys are trading off of key levels. My first tip would be you should not take trades solely off of a key level bounce, break, or reversal. When trading these levels, you should use other confirmations like volume or any other indicators that you have used in the past as confirmation to enter a trade at a key level. So if you see price break over a key level, that doesn't mean get in. You should see price break over a key level with increasing volume, or if you use RSI, whatever confirmation factors on the RSI tell you it's bullish. But there should be multiple confirmations telling you to get in a trade. The more confirmations, usually the better the trade. The second tip that I want to give you guys is that key levels are areas on the chart. They are not a single price point. So what that means is that if you have a key level at 105, that doesn't mean the second price breaks over 105 with volume, it's time to buy. What it means is that sellers are going to be near that 105 area. So you may see aggressive selling all the way up to 105.15, but you should know that there's a distance above and below this key level where you'll start to see selling pressure or buying pressure. They're not single price points, and I'll give you guys an example of that later on in the video. The third tip that I want to give you guys is when making a plan around key levels, try and use psychological numbers. Buyers and sellers are usually attracted to psychological numbers or whole numbers. So when I say whole numbers, I'm talking about numbers that are nice and clean. So like 101, 102, 103, they don't have ugly decimals at the end of them. It could also be numbers like 101.25, so quarters, or 101.50, 101.75, numbers like that, not a number like 101.23. If you were trading or you're going to put in an order, think about what you would do. You're not going to put in a sell order at 101.23. You're likely going to put in a sell order at 101.25 or 101.50, right? And the fourth tip that I want to give you guys is usually the more times a level is tested, the weaker it becomes. So say you have a support level that keeps getting tested and price keeps falling back down to that support level. Each time that price tests the level, the weaker it becomes. Same thing for resistance. If you have a resistance level, the more times that price tests that level, the weaker it becomes. And you can think of it like this. If there's 250,000 sell orders at a resistance level, each time that price comes and fills some of those orders, the total order amount is getting smaller and smaller. A chunk of that 250,000 shares are being sold is getting smaller and smaller until price has filled all of these sell orders and can now move higher, right? And the fifth tip, I didn't include it on the slideshow, but the fifth tip is that when price breaks over a level, more times than not, it's going to come back for a retest. So if you see a break of resistance and you see price start to go against you, don't get worried. Usually resistance becomes support once it's broken, and support becomes resistance. So if price is going to continue to the upside after breaking a resistance level, it's going to break the resistance, come back and test it as support, and if it holds as support, then you can kind of get that confirmation that you're going to see more upside. Same thing if you're playing to the downside. If price breaks support and comes back, it's going to test it as resistance. If you see selling pressure now at that level and price pushes back to the downside, that's confirmation that there's going to be more downside. So there's two ways of playing levels. You can play, if you're a breakout trader at least, if you're playing breakouts, you can either buy in the breakout or you can buy when price comes to retest the level. Or if you're shorting under support, you could short when it breaks support and then short or add on to short your short whatever when price comes and tests the support level as resistance. And now I want to discuss how not to draw support and resistance. So this is an image of what I would not do when drawing support and resistance. I would not clutter your chart with excessive amounts of levels. When I'm looking for my levels, I want to have the cleanest levels. The cleaner the level, add significance to it, right? If more traders are looking at the exact same level that I am, there's going to be added significance to that level. So I do not like my charts looking like this because you get what's called analysis paralysis, where you're trying to get into a trade, but you're having troubles making a decision because there's just too much going on. The same thing happens when you have too many indicators. That's why I personally like to keep it simple. Less is more, in my opinion. I personally only trade with price action and volume. That's it. I don't like indicators, etc. So let's discuss how to draw support and resistance. I personally zoom out to a higher time frame, like the daily. I only use a daily when drawing my key levels, but you can use the 4 hour, the 1 hour, etc. It just depends on you as a trader. I've seen people have success drawing them on all time frames, but I personally like to use higher time frames, daily time frames, because those are going to be the stronger and the more significant levels. You'll have traders from day trading to swing trading, everyone's going to be paying attention to that level, and I like that added significance. When actually charting these levels, once you're on that higher time frame, you want to look for obvious levels, and these are the levels where there's going to be a clear change of direction. So you're going to be looking for areas, if say you're looking for resistance, areas where price has rallied to in the past and then makes a strong reversal off of. Or if you're looking for support, it's going to be an area where price has dumped to or dropped to in the past and had a strong change of direction to the upside. There are going to be areas where you see large rejections, or even areas where you see multiple tests of a single price level. So I have an example of that on PLTR where you don't see the biggest rejection, but the area gets tested multiple times, and to me that adds significance to it. And like I said, or hinted to in the previous slide, is that if a level breaks, it becomes the opposite. And what I mean by that is if resistance breaks, it should act as support if you're going to see more upside. And if support breaks, it should act as resistance if you're going to see more downside. And there's multiple ways of playing these levels. I can make another video in the future. You can either trade them as breakouts, or you could even trade them as reversal levels, right? So I'm going to give you guys two examples, Amazon and PLTR, while I'm going to chart out the levels. And what I would recommend doing when I chart out these levels is before I even start charting these levels, what I want you guys to do is pause the video and kind of just jot down or even chart it out yourself where you would put levels on this price chart. So right now, please just pause it. I'm going to continue the video, but hopefully this helps you guys practice and you can kind of adjust and see how our levels match up. So my first step, what I do mentally, is that I'm just looking at the chart and seeing where I see large rejection. So if I start from this left side, I'm seeing that price rally to the upside, then we got a huge rejection to the downside. So this would definitely be a resistance. This is acting as a ceiling. Again, you see price rally to the upside, huge rejection to the downside. And then you can see this level is respected once here, twice here, 3 times here before it's finally broken over here. Then when we do break, we rally to the upside and then get another large rejection to the downside. Again, this is resistance. Again, price rallies to the upside on a large rejection. Right now, I'm only identifying the resistance levels, but these are all valid resistance levels. Again, rally to the upside, strong rejection. Again, rally to the upside, strong rejection. So you could use levels like here where you have smaller rejections if you are day trading, but I personally like to have these bigger levels here. I don't really pay attention to this mush in the middle. So now let's identify the support levels. Here we have a large sell-off and we see price bounce. Aggressive buyers are stepping in here. Again, price sells off and aggressive buying comes in here to push us to all-time high. And you can see this level is respected again right here, and then you see again another sell-off. Aggressive buyers step up here. Again, you have this level, this area right here that seems to act as a floor. Price cannot break through it. You have one test here, you have a second test here, you have a third test here, and you even have slightly a fourth test here. But this is one of those areas where you don't see a large change of direction, but it's an area that was tested multiple times, so I count it as this key level. So now that we have identified all of the key levels on the chart, what I want to do is I want to add our actual horizontal lines. And if you're on tradingview.com, all you have to do is go to where it says trend line tools, and you can either use a horizontal line or the horizontal ray. I personally like to use the horizontal ray. And just a quick tip, if you guys want to have a toolbar up here so it's easier, so you don't have to do all that clicking, you can just click the star right here and you can make it easily accessible. So now let's just start and mark off all our resistance levels. Like I said, you saw aggressive selling in the past. This is acting like a ceiling here, so I'm adding a line there. Again, aggressive selling was seen in the past, so I add a line there. And I personally draw my levels at the wick ends. I do not put them in the middle of the wicks unless I'm trying to get more touches. But for me, I always start the level at the wick ends, and I may adjust it later in the future. I personally do not recommend putting it through the body because you want to see that price has respected that level. If it's through the body, that means price either closed below or closed above that level, but it wasn't respected. Again, we have resistance up here, like I said prior. Again, resistance here. And then that's about it for resistance. And then on the support side, like I said, I put it at the wick end. You can see this support level gets tested 1, 2, 3 times. And then again, we have another support level here. And the last support level that I would chart would be right here. Like I said, this level, it wasn't a clear direction change, but this level was tested multiple times, right? So these would be all the key levels that I have on Amazon. Hopefully you guys got levels that matched up to these. If you guys have any questions about this specific chart, just leave a comment in the comment section below. A couple things I want to point out about this chart is that once a resistance level was broken and acted as a support, or once a support level was broken and acted as resistance. So here would be a great example of it, right? We see this acted as a resistance level, tested 1, 2, 3 times. It breaks here, comes back down, holds that level, and then pushes to the upside. So if you were playing this as a breakout, you could buy the breakout here, or you could even wait for the pullback into this level and buy it here, right? And that's just referring to the point when I said resistance becomes support. So now let's look at a chart, for example, PLTR. But before I go to PLTR, another thing that I just noticed is that this goes back to the point of these key levels are areas, not a single price point. So here we see this level was established here. And even though we get a breakout again over here, you can see that it pushes above the level and gets shot back right down. So instead of using this exact level, this 3345.22, I'm going to know it's an area here. So I'm going to wait for a close above or something showing that it's holding the level, right? So now let's go to PLTR and chart out PLTR for a second example, and then that will be about it for the video. So on PLTR, again, you see the strong rally to the upside, then you see a clear change of direction. This would be a resistance level. I put it at the top of the wick. Again, rally to the upside, clear rejection, resistance. Again, rally to the upside, clear rejection, resistance. And then again, rally to the upside, clear rejection, resistance, right? So now on the downside, you see a clear drop and then buyer step in. A clear drop, and this is again one of those levels where it's tested multiple times, but it doesn't produce a clear change of direction, but I still count it. So this would be support for me. Again, a clear drop, and then price bounces back to the upside. So these would be all the levels that I would use for PLTR if I'm making a trading plan. I'll make another video about how to play off of these levels, but this video was made with the goal of trying to help you guys or get you guys started with drawing levels on your own. Hopefully you guys enjoyed the video. If you guys have any questions, leave a comment in the comment section. If you guys want to see more videos about a specific topic, you can comment about that. Additionally, if you just have any feedback about how poorly I did making this video or how well I did, etc. And then if you guys like the video, please leave a like and subscribe to the YouTube channel, which would really help me and other people could see this content. I appreciate you guys watching my videos. I'll see you in the next one. Peace.